Welcome back. Lots and lots of stocks to track, and we have an expert in the house to now help us with some fundamental ideas. Amnish Aggarwal, Head of Research at Prabhudas Lilladher, is with us. Amnish, great to have you on. I don't know if you caught that big exclusive that our colleague Timsy was just telling us about, these proposed rate changes, which the GOM is likely to take to the GST Council. And, they're pretty important in terms of the architecture, because what seems to be the thinking now is that tax different goods depending on the MRP, on the price. So if a shoe is priced for 1,000 rupees, it should be taxed differently. But if it's priced at 15,000, it should be taxed differently. So on and so forth, for watches, for apparel, etc. And there's talk of more taxes on things like tobacco as well. So your thoughts on apparel companies, apparel stocks, or even something like ITC?
Okay, hi. So I think the tax rates, which are actually, you can say, which are doing the round and which are being talked about. So there are two things. When it comes to some of the goods which are placed at, say, taxation of 28% plus, say, some certain amount of cess. So if the cess is now subsumed in that, then the tax increase is not likely to be that high. So this will be particularly true of, say, whether it is cigarettes or aerated drinks, etc. But in some of the segments, for example, whether it is apparel, whether it is shoes or some of the other products, which might be now considered as, you can say, luxury goods, whereby the taxes might show, you can say, a bigger increase than some of the companies, I think, which are catering to, you can say, very premium apparel. I think your premium shoes, I think those are the products where there will be an effective increase in taxes. And you can say, but I believe that some of those segments, they are not that, you can say, price sensitive. And the consumers who are buying, say, a very expensive watch or, you can say, premium apparel, there I think it will not move the needle much for any of the listed players.
Okay, so you're not too bothered with some of the consumer goods categories, but what about ITC specifically? What's the house call now? And if there is some, let's say, sentimental reaction, if there's any selling on ITC, would you buy the dip? Would you stay away? If indeed this comes through, 35% special tax on tobacco products.
You see, as I said, it depends in what form it comes. If it is at 35% and cess is over and above that, then it is definitely a negative. But if it is 35%, which includes 28% of GST plus 5% of cess, then the increase is only 2%, which can be easily absorbed by companies. But having said that, we are already in the month of December, and now on February 1st, we will be having the budget. And there is always a chance of, you can say, your excise duty being tinkered in budget. And it happens, you can say, it's an yearly phenomena. So I think ahead of that, I think we usually remain slightly cautious on ITC, because the stock actually gives lot of fluctuations as far as your stock price is concerned ahead of budget. So at this point of time, it's time to be slightly on the cautious side in ITC ahead of budget, and if anything major happens on the cigarette side.
All right, Amnish, I think you also track PVR. Yesterday the stock had a strong close. Pushpa 2 is going to be releasing in the next few days, and everyone is quite excited about it. So it seems. What's your view? The talk is that on the first day, the collections could be as much as 300 crores, which will be the highest ever. Your view on the stock?
Okay, you see, PVR has become more like a trading stock, because every time you got some good movie releases and to which the box office collections are high, the stock does well. Now, if you look at the pipeline for, say, the next 2-3 months, I think the pipeline looks quite decent at this point of time, which can provide, you can say, reasonable gains as far as your PVR stock is concerned. So as of now, I think the PVR is a typical stock. If the pipeline is good, if the movie releases, you get, say, 2-3 big hit movies during the quarter, then you can actually expect, say, 10-15% return in this stock.
All right, Amnish, we'll leave it there. Thank you very much for joining us. Good speaking with you, and it's a pleasure.